Hello, dear traders. How is everyone doing today? Wonderful Monday, isn't it? So, my name is Thomas, and I will conduct the following webinar for you. Dear traders, dear ladies and gentlemen, if you have some questions, I will be very happy to answer them because basically questions are usually they usually lead to discussion, to exchange of opinions, and usually that's a very good way to uh, get to know the secrets of trading of you and I, so we can freely exchange our opinions on this topic, on this matter, because we are all here basically fighting against, like on the one hand, against each other, against the market, and we are trying. All of us are here with the same goal. So it's not about charity. It's not about like improving the world for the better, as some people in some startups would claim. No, we are here for money, and we have to be blunt, honest about that, and it's totally fine about that, because traders are to make money. So it's the kind of activity, the kind of job or occupation or profession. It's all about making money. So people in Goldman Sachs, they're to make money, like day traders. So like long-term investors, like Warren Buffett, and people like him are a little different breed, and they invest for weeks, months, years, probably decades, and of course they have different goals. But when it comes to us traders, so it's all about trying to get some profits here and now. So it's not about so much about impacting the world, it's about profits, and there is absolutely nothing wrong with that. So Mr. Asim, Vikasrai, Bihar, hello guys. So since there are not so many questions, and I really want to highlight the today's webinar once again, to a very important, I want to dedicate it to a very important topic again. So once again, something that we mentioned yesterday, I mean, not yesterday, but last week, on this webinar, it's once again, I want to give you some more clarity and some more thinking, like what we can really think about our profits calculator and about baseline success rate and how it affects your trading in general and how you can improve your trading results based on a few simple concepts. And maybe it won't improve your trading overnight, but it will give you some real exact things that you need to be improving. And that is probably the most important thing, is to diagnose, to figure out what your sticking points are, and then from there you can move further and deeper in terms of improving certain aspects of your trading life. So taking big risks. So yeah, taking big risks is always a big problem. So yeah, we're gonna talk about that as well. So guys, let me go ahead. Screen is not clear, guys. So if my screen is a little bit blurry or something like that, you need to change properties of this stream in your window. Basically, you need to find that right hand corner on the bottom of the screen, and there is that like sign where that icon where you change properties and just make quality to 720p pixels or 1080. Yeah. Okay, so a question from a chat here. Hello Thomas, please, what's your advice for traders who repeatedly blow their accounts? All right, so let me start talking about this thing which is called profitability calculator, because it basically overlaps that topic about repeatedly blowing their accounts. So guys, first of all, yes, your success rate and baseline success rate. So what does it say here on our platform, on the platform? So it says this, it says the following. So by keeping your success rate above baseline, your overall trade results will be more balanced. So it doesn't really mean a lot, frankly speaking, because it's a little bit too like opaque, not really precise, but basically it means that this is your baseline success rate, and let me show you the following. So, guys, I modified this thing a little bit from last Monday, so I keep showing it, demonstrating it to my colleagues, and all of them seems to be liking this thing very, very much. So, what we are seeing in this table is basically, so here's the explanation. So this table shows what percentage of profitable trades a trader must have in order to stay profitable in his trading. So in this table, there are a few outputs that you can change. So this for trade size so in any currency, it can be $10, it can be 10 euros, it can be 10 INR, etc. So you can easily adjust this. So say INR, it would be probably 150, like $2. So, but let's do simple calculations. Now, next thing is all calculations will be based on 100 trades. I do this only for the matter of, for the sake of convenience, so that it's easy to calculate and it's easy for you to understand. Next, rate of return on asset. So, guys, in the following example, and this is not something that you should follow like say 100%, but this table is going to give you a lot of perspective, a lot of insight, a lot of kind of like at large view about your trading in general. So, of course, we have some, we cannot include every case, but we try to include the most of it. So, rate of return on assets. So let's imagine I trade on starter status with 82% rate of return, and my percentage of profitable trades equals 55. Okay, so it's 50%. So I don't really have a strategy. I'm a newbie, and I open up trades, down trades, and I do it a little bit random. So my result is always 50-50. I don't really have any sort of big advantage of my trading strategy over my negative trades. So I kind of trade 50-50, right? So we all do that. We all start with, say, 50-50 approach. All right. So there is a question from Mr. Thug Life. Could you tell us some pros and cons of trading FTT over Forex? Yes. So stay with me, and in about 5-10 minutes, I will explain to you, because I will be talking about also this money management approach with Forex, and I'll show you how Forex, how this thing works, can be applied to Forex trading. Now, here's the story. Percentage of profitable trades, 50, and after opening 50 trades in the amount of $10, we are going to get this many profits, $410, because from every profitable trade, we would get, in the amount of $10, we would get $8.2 of profit. So we multiply this by 50 trades, and we get this result of $410. And from our losing trades, amount of losses, we end up having, we end up multiplying this number of trades. So basically 50 losing trades, or percentage of losing trades. We multiply this by 10, because in every losing trades we lose all of the all this amount, and the difference equals 90 minus 90. So that is our net P&L. That is our net loss. So if we keep trading like this, with this fixed amount per trade, and this percentage of losing trades to winning trades, it's not, we are eventually going to end up losing money, and no one wants to do that, right? So let's see what parts of this equation can we work at. So let's imagine we start increasing size, our trading size. So we go from 10, we go to 20, our net P&L goes even worse, and we start putting $50 per trade, and we end up losing $450 after 100 trade. So that's a way to basically losing your deposit, and you never want to do that. So you should realize by now that this is not really generating profits for you. So let's go back to $10. Let's imagine we now switch to advanced level, which is 84%. We still end up losing money. Let's imagine we trade with expert level. Okay, so we lose money. but now we lose them at a much slower pace, and so far we've lost only $50. Okay, it's still not a profit, so it's kind of not a good thing in general. We need to change something else. We need to work on something else. Now, let's imagine we started working on our trading strategy, and now we are moving towards improving our trading strategy. So what's gonna happen? So we somehow, talk to our friends, talk to our colleagues. Someone tells us, okay, so if you trade, say, with Friday strategy or kind market strategy, and I managed to increase my percentage of profitable trades, I managed to raise it up to 53%. So with this ratio, I'm still in the losses. I'm still out of the money, but this net loss is not that bad. Now, I keep improving. Now it's 54. Okay, almost zero, and then 55. So with this proportion of between losing trades and winning trades, so 55% winning trades and 45% losing trades, obviously that is 45%, my net profit turns into $1. Okay, it's not much, of course. You cannot really make a lot of profit with that, but you can have, you stop losing money, and that's your step one, or the first rule of the trading club is to learn how to stop losing money, and then profits will come in later. Okay, so we know that this baseline success rate is basically refers to this. So 55%, I'm not losing money anymore. I'm in the profits. Okay, smallest profits, but anyways. Now, let's imagine we trade on the same conditions with advanced level. So 84, or even we start trading with 87%. So we get 28.5%, $28 of profits after 100 trades. And we go to say 90% rate of return. So now we have $45 net profits after 100 trades. So how long is it going to take us to open 100 trades? Well, most traders can do this in one day. I think if you are an active trader and your basic duration, like baseline duration of trades equals 3 minutes, you can do this within probably 5-6 hours of trading, and you can get $45 of net P&L of profits. Is it a good amount of money? Well, it's up to you. So for some people, it's going to be a lot. For some people, it's not going to be much. But $45 in one day multiplied by 20 trading days, that generates you almost $1,000 of profits. Ideally, right? We are not talking about ideally, you, based on this financial model, that is going to give you $1,000 profits by the end of the month. Not bad. I think that's profits. Now, how can you increase this this profit? So first, you can increase your profits. So now from $20, from $10, instead of $10, we start putting $20 in each trade. So $20, and then your profit turns into 90 after 100 trades. So you can make $90 in one day, and then you start doing more. And if you trade with $50 per trade, your net profit, with given this condition between this ratio of 55 to 45% losing trades, gives you $225 of profits. Not too bad. Now, at the same time, how much money do you need to have in your deposit in order to invest $50 per trade? So let me do the maths for you. So the answer is 2,500, because you never want to put more than 2% of your deposit, of the money that you have in your deposit, into one trade, into one single trade. Of course, I mean, we all violate this rule from time to time. Some people keep violating this rule often. But ideally, you don't want to put a lot of money. You don't want to risk a lot of money in one trade. Maybe you can do up to 5%, and then you only need 1,000 trades. But let's imagine you make $200 of profits per, that's your net P&L. So we multiply this net P&L by 20 working days, and that gives us $4,500 with your initial deposit of, say, 2.5K. So it's possible if all this criteria is met, if all these conditions are executed, you can count on this kind of profit that I just showed you. So like this. Now let's think. So let's put it like this: your monthly estimated expected monthly profit. Monthly profit. So yeah, let's imagine you trade with still 50%. So your monthly profit turns into monthly loss of $2,000. Okay. Tutorial about trading news. Okay, that's a different topic. It's big one, so it probably needs a separate video like for that. Mustafa, yes, there was this terrible earthquake in Morocco on Saturday morning, I think, or maybe on I think, yeah, I read about this on Saturday. So my condolences, and it's a very tragic thing. So yes, natural disasters are a terrible thing, and we all hope that they wouldn't be happening, but they just from time to time keep happening. So unfortunately it happens. Well, anyways, guys, going back to our profits calculator. So let's imagine that you start, see this difference between 50% profitable trades and 55% profitable trades generates the difference of, it's just 5% difference, but look at this tremendous difference. And it's amazing how we sometimes don't care, or like completely disregard the fact that we can be trading with 83% rate of return, or 84 or 80, and we sort of like say, it doesn't matter, it's 1%, what is it, like 10 cents? But once you start taking into consideration the amount of trades that you make per month, your delta, so this difference turns huge, I think. So 55 against 45. So now let's imagine you start improving your trading system and you start having 56% profitable trades, and then like 58. So 58 to 42. Okay, so probably 60% winning trades and eventually 40% losing trades. That's going to generate you $280 profits after 100 trades. And then your monthly profit will be, you can estimate it to be somewhere around 5,000, maybe even higher. And of course, if you increase your trade size by just a little bit, you go from $20 up to $30, you're gonna end up having this much profits. So guys, it really is an incredible thing how much profits you can actually have, and how this thing affects everything. So let's imagine you still trade with 82 on average. You trade sometimes with 82% rate of return, sometimes 84. But okay, so let's take the minimum one, even if you are trading on expert level. So 82% rate of return on this asset and 60% winning trades. Okay, so let's be more realistic. Let's be, like say, 57. You can still have this many profits, so more than 2,000, if you manage to do the following conditions. So guys, I don't know if you're following me on this. I know it's not a simple thing to sort of understand from the very first try, but please bear with me and ask me questions if you have. It's a very important concept. It's all about money management. Now let's talk. So we talked now about FTT mode, but let's look at the same the same table, the same pretty much everything. But now let's look at the comparison between Forex mode of trading and FTT mode of trading. Now, what would be the difference? So 55% rate of return, and that's our net P&L after 100 trades. Trade size $100. Now, let's imagine the following thing with Forex. So with Forex, now we have a totally a new thing that we have to take into consideration, and it's a very important topic. It's a very, very important aspect of trading, which many people neglect, and it is called the risk-reward ratio. So this risk-to-reward ratio basically tells us how much you're willing to lose in each trade and what's your take profit. So let's do some very conservative approach. So my stop loss equals $50 or 50%, and my take profit equals 100%. So my one profitable trade of mine can cover 2 losing trades. So it's basic maths. 100 and minus 50. So minus 50 plus minus 50 equals minus 100, and okay, so they sort of kill each other, and it turns into 0. So let's imagine we have this. We do the same thing with Forex. We open 100 trades. Our percentage of profitable trades comparing to losing ones equals, it's still 55 to 45%. And net P&L, net profit equals, so here it was 450, and here it turns to 3,250. Now, of course, you cannot open 100 trades in Forex within one day. So opening 100 trades, that's probably your monthly plan. Yeah, I would say, I would put it like this. So 100 trades on Forex, say 5 trades per day, maybe that's somewhere around like 1 month of trading. But this is your end results in profits. And so I would say this kind of ratio on Forex, 55 to 45. So we have to take into consideration that you sometimes might end up in a situation where you are making some profits, and then the market turns, and then you end up losing money even in profitable trades. So this ratio is quite difficult to maintain, but it's still possible. So the more realistic ratio between profitable trades and losing trades, it's somewhere between 40% winning trades and 60% losing trades. So in reality, it's harder, it's more difficult to have more profitable trades. I'm talking about percentage, more profitable trades on Forex rather than FTT mode of trading. That's just the mere reality of trading. Now, but still, you can have you can enjoy $1,000 net profits after 100 trades. Now, let's try and so because this thing you can easily control, right? You can easily control this aspect. So instead of 2, you can now start making profits of 3. Risk to reward now turns into 3 to 1. So instead of making $50 profits from one trade, you start making 150. Are you still with me? You still following me? Ochai says here, other platforms use pips, but you guys don't. How do we then know our profit targets? No, it's still the same. I mean, like we use. Why are we not using pips? We use pips. So, for example, guys, here are my trades on Forex. For example, my trade on Brent, my current trade on Bitcoin, it's still in the losses. And see, that's my ratio. So I expect to lose 50 and 50%, and I can expect to make 250. But you can also change these values. So you can set stop loss in money, in percent, and also you can set an exact quote. So there is absolutely everything is there. So how about my Brent? So yes, once again, it's minus 50 is my stop loss. My take profit equals to 150, and you can always know how much basically your asset needs to travel in order to make money, because it's always here on this profitability scale. Basically tells you, so my trade needs to reach like 100. Yeah, okay, so that's a little bit difficult for brand to really go to 100, but still, I mean, you can still manage your position. Now, guys, I'm giving you this comparison, and basically 2 webinars in a row I keep talking about this because it's a very fundamental aspect, and it seems that not everyone pays enough attention to this. And then, you know, people end up asking me, so why am I losing money? And they sort of think to themselves like, why am I losing money? I'm doing everything right. But it's once again, it once again highlights the importance of doing your research and actually working with your financial calculator, finance journal, or trading journal. It goes by different names, but the point is this: you always need to analyze what's going on in your trading. What about your percentage of profitable trades? And then that gives you flexibility. So then you can, for example, let's imagine on Forex mode, you can easily reach 50% profitable trades, but you don't want to reach this level of say 3 to 1. You think it's a little too difficult. So then let's do 1.5. So your stop loss equals 50, your take profit equals 75. So you still end up making money because of maths, right? So now let's imagine you start investing $200 in every trade. Okay, so this gives you this much profit. So I don't know how else can I stress the importance of you know, guys, importance of this aspect of your trading life. But it really is a very important. It's a very important tool. It's a very important aspect of your trading activities, and I cannot really underestimate this importance. It's a very important thing. Now, when it comes to FTT, and FTT is our, it's still the most popular, it's still more popular than Forex trades in our platform, and that's why I put a lot of emphasis, and I put more emphasis, more stress to this mode of trading. And basically, yes, so look how your trading results, they change if you start. I mean, like, if you increase this by 1%, look at your monthly profit. I mean, like, I cannot really stress this even more. It's like, how do I, like, red? Do you want me to put it red? Okay, so that it catches your eye, meets your eye. So 84%. So we used to trade with 82, now we go to 84. So see the difference? Like 5, so 1% here turns into $500 difference at the end of the month. Let's do, okay, so $20 per trade, a more conservative approach. You can reach that with $1,000, maybe $1,500 per trade. So let's imagine you have, and now let's imagine you improve this. You start working on this. See, 1% difference here results in even higher, like 70%, or $700 difference per month. But this one is a little different, is more different, more difficult to reach, because you need to work on, you constantly need to work on your strategy. So this thing, it's kind of a little bit, it's still in your control, but it's a little bit beyond your control, right? You cannot easily say to, you know, to the market, okay, so now I start having 58% profit, profitable trades instead of 57. But this thing, rate of return, you can easily affect, and see every percent makes a huge difference. So this is how much profits potentially you can get with 90% rate of return. That's 4.8, so 4,840. Now let's imagine you trade with starter and you get like almost 2,000 less. So it is only 8% difference, but it's such a big difference. So let's imagine you are like once again, a very conservative approach, like 55. Okay, so 55, it's not enough, but with 90%, you make these profits. See, it's all about mathematics. It's all about your determination. It's all about your focus. Guys, do you, okay, question here. How would the profit chart look if I were trading with 1.25 per trade? Right, let's focus on some conservative trading with, so probably 82. So, doesn't seem very promising, right? So after 100 trades, your monthly profit equals 2.5. So what you need to do is you need to work on your percentage of profitable trades. You need to work on your strategy. So 58%, 82. Okay, maybe you need to work with, like, say 60% profitable trades. This would be your monthly profit. I can sort of do the same thing with Forex, but I think it's just these amounts are kind of small for Forex. Personally, it's just no one really trades Forex with such small amounts per trade. It's just not realistic. I probably would never do that. So yeah, let's imagine you do $2 per trade, and your ratio is this. Well, guys, I mean, I would still. Okay, so what you can do is you can go to the market and you can sort of buy this increased profitability for a month. It costs, I think, around $70. I'm not sure if I trading conditions. Yes, you can buy advanced status, or I mean, like, you can buy up to 85% profitability, so $70 per month. But you see the difference. So 82, your monthly profit equals $150. 85, okay, so basically that's $70. Okay, so it's not a huge difference, but let's imagine you start trading with $3. Okay, so now it sort of becomes more significant. So of course, the more turnover you make, I mean, like, it's like a business, right? If you sell, for example, 100 cars a month, that's one thing. If you sell tens of thousands, like Toyota does, or even Tesla now does, that's a totally different game. And this difference becomes. So it's all about this compound effect. So it's all about compound percent, and it's all about big numbers. So with small numbers, yes, if you open 10 trades, and you won't really notice this difference. But like I said, if you do the monthly profit, like say 20 days multiplied by this much profits per day, all right, so now you end up having this much profits. So yes, there was a question from a trader in Fazli. In your experience, Thomas, which one is more profitable to trade, Forex or FTT? So once again, it all comes down to your risk appetite first and foremost, and your maybe psychology. So how you can trade. So because some people they don't want to wait. Some people just want to get results here and now. So I would say, personally, I prefer Forex, and especially over time, I sort of tend to be trading Forex more and more and more, because my trading horizon, like basically duration of trades, also goes up and up and up and up. It increases, and I now realize that I shouldn't be, like, constantly be nervous and opening hundreds of trades per day. Everyone, like, grows old. I don't want to say I'm getting older. I'm growing up, and once over time, you eventually end up investing more into bonds, into more conservative instruments. But at the same time, if you are just in your beginning stages, and probably your first, second, third, fourth, maybe your first 5 years in trading, you can still, you are still not tired of opening many trades per day, and you can do 100 trades per day. And FTT mode of trading, in reality, is a much faster way to grow your capital, because how long it's gonna take to, like, say, monthly profit here. how much time it's going to like open these 100 trades, how many days you can trade. So yes, I mean, you can get probably $9,000 profits. I mean, given trades of, okay, 100 is too much, no one's going to do that. Okay, so let's be realistic here. So 30 trades and our, so 60 to 40 ratio, that gives us $420 profits. We get $8.4 thousand in profits. So with Forex, okay, so let's be a little bit more optimistic. So our risk to reward ratio is this one. So 50-50, but 50-50 is still difficult to achieve. So I would say a more realistic approach, a more realistic parameters for Forex trading would be this. So we lose 50% from our losing trades because of stop loss, and then we end up having $150 profits. So that's a more realistic approach to trading. So guys, you see the difference, you see the maths. By Wednesday, I think I will have this table ready and I will be able to send out this table to you. So do attend our trading session on Wednesday. Okay, question here from chat. I think Forex is more suitable to trade in a higher time frame. For example, 4 hours daily with at least 200 per trade value, since it doesn't use pips and instead uses percentage. So yes, I mean, it doesn't really, so once again, it doesn't matter if you use pips or percentage. In my opinion, percents or actual numbers like absolute figures are easier to calculate and to sort of understand them better. But it's up to you. Like, and yeah, I mean, like $200 per trade. So you end up risking $100 in each trade by stop loss, and take profit equals 300. Yes, your net P&L turns into $6,000. So yeah, I mean, obviously. So a question here, bro. Also, could you tell us any strategy that is bringing you consecutive wins in FTT for any time frame? So, well, I mean, basically all our trading strategies can do that. Especially, well, I mean, my favorite strategies, which I mentioned many times already, are as follows. It's kind Martin, it's triple rebound, it's so strategy momentum is basically Excel strategy. I love it a lot. One of my favorite strategies. It's so easy to understand. But okay, so triple rebound, kind Martin, Jactar, Horizon. Guys, I mean, all these strategies are great. But of course, it depends on your experience, and every trader, I mean, like some guys, for example, I talk to traders from our company. Some people love rodeo strategy. Personally, I don't like this strategy. I mean, I know how it works and I can trade with it if someone asked me to, explain it, but it's not my cup of tea. I don't like this strategy. But some people, for example, who I talk to, they don't like triple rebound. They say, triple rebound is boring. I'm like, what are you talking about? It's probably one of the best, one of the most efficient strategies. And they said, we think this overbought or oversold technique, it's not really as profitable as, for example, and then they say like the Chaikin oscillator. They come up with some, crazy, like radical ideas to me. I don't know. Some people say, okay, I only like moving averages or sliding on averages. That's our name for that. Some people like this Japanese pearl reflection. So, I mean, it all comes down to practice. And it's all about practice. It's all about opening many trades, and actually like opening 50 trades or maybe 100 trades. That would be even better. And then calculating. So how much profits is this strategy generating for you? And then you compare and you see the results. And then you do this kind of maths and you see, okay, so if I trade with $50, that is going to be my monthly profit. All right, this amount, $4,000, seems a little crazy for maybe beginners. It seems a little bit far-fetched and unrealistic, but I mean, it's all there. The conditions are there. Why most traders, why say 95% traders end up in a situation like this? with minus $500 profit or minus $900, losing $900 in 1 month, is because they violate this or they violate this, and they don't trade with fixed amount per trade, or when it comes to Forex, they trade with 1-on-1 ratio. So of course, on Forex, yes, if you have more losing trades than profitable trades and your risk to reward ratio is like 1-to-1, basically that's not gonna save you. You're going to end up losing money at the end of the month. So, dear traders, ladies and gentlemen, I think I will be wrapping up my webinar for today. I hope you enjoyed this trading session, even though it wasn't so much about, actually opening trades. It was more about theory, like theoretical side of things. But I think we oftentimes lack a little bit. So we talk about strategies, we talk about, and I see questions like, give me this best strategy, what is the best indicator, what's the best strategy, and then we sort of forget about these fundamentals, the fundamentals of trading. And actually, profitability calculator and money management, and alongside with risk management, are some of the most important aspects of trading, which oftentimes we just plainly ignore it. We like bluntly ignore it. So, guys, if you liked what I said and what I showed you in this webinar, so please don't forget to click that like button and subscribe to the channel if you haven't done so. You can write something in the comment section. It will be open for the next minute, or you can write some comment in the below the webinar window. You can watch this webinar again. The recording will stay here in the YouTube channel, in our YouTube channel, and basically all the information is there. It's all about, theory is simple. Theory in trading is relatively simple. I'm not talking even about, we have people who trade, people are like, say, car mechanics. It's so much more, it is such a difficult thing. Like, you basically need years, you need to spend years in order to understand how to be a good car mechanic, because you really need to know a lot of stuff about like how car engine works, like the components of a car engine, stuff like that. But when it comes to trading, theoretical part of thing is relatively simple. What's actually difficult is the psychological aspect. Okay, because in every trade you risk your oftentimes hard-earned money, and it's a totally different thing. So theory is simple, but executing that trading is actually difficult. All right, guys, I guess that's gonna be it for today. Thank you very, 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 very much for your attention, and I will see you soon. Bye bye. See you soon.